Today, you guys, we are talking about my favorite tax when it comes to business taxes, and that's your income tax. We are going to talk about what it is, who's responsible for paying it, how much it is, and how to pay those taxes. So what are your income taxes? Your income taxes are those taxes that we really are thinking about when we think of the word taxes. They're the taxes you pay typically at the end of the year. We'll talk about quarterlies as well, based on the income you produce in your business. So now we want to talk about how much is income tax. So income tax, you guys, is always based on a percentage. It is a percentage based on your net income. If you're a C Corp, it's a flat percentage of 21%. For all of my other business entity types, my Schedule C businesses, my S Corps, and my partnerships, your income tax is going to be a percentage of your income based on your personal marginal tax rate. And the most common personal marginal tax rate is the 24% tax bracket, with the highest tax bracket being the 37% tax bracket. Don't forget, if your state also has income tax, then you need to account for that as well. If you're in Colorado, it's where we are, you have a flat tax rate of 4.6%. There are 7 states that don't even have income tax. And then we have California, which has the highest income tax rate at 13.3%. So next we want to talk about who pays income tax. So from a business perspective, you guys, only C Corps technically pay their own income tax. Every other business entity type, my Schedule C businesses, my S corporations, and my partnerships, the business owner actually pays the income tax when they file their personal income tax return. That said, as a business owner, the actual cash for your income taxes is probably going to come out of your business. So you want to make sure you're accounting for that when you're looking at your business cash flow and your budgeting. Finally, you guys, let's talk about how you make your income tax payments. You should be making these payments quarterly. When we hear the terms quarterly estimated tax payments, we are talking about income taxes. You also need to make sure that you're paying your federal income tax and your state income tax if you're in a state that has income tax. Although you can totally mail your payments in, and we still have clients that do that, I highly recommend you go online either to irs.gov for your federal payments or to your state revenue agency and make your payments online, because it's faster, which means it's more timely, more likely to get there, by the due date, and it's so much easier to track. If you don't pay your quarterly estimated tax payments, then when you file your return in April of the following year, that's when you'll end up owing your tax bill. If you guys have any questions about what we talked about today, go ahead and leave a comment below. And then I highly suggest you head on over to our Facebook community, Money, Taxes, and Finance for Small Business, because these topics are what we talk about on a regular basis and have live trainings on every week. You can access that group by clicking the link in the description box. Thanks for watching. If you found this video helpful, please give it a thumbs up, subscribe, and while you're loving on me hard, go ahead and hit the notification bell so you never miss a future video.